If you're one of the millions of Americans that hop in and out of the stock market, you need to know how your taxes is going to be affected. Today, we're going to be going over what a 1099-B is, also short-term and long-term capital gains and how it's going to affect your taxes. First thing is you're going to receive a 1099-B as in boy. This is going to go over your gains and your losses throughout the year. So a capital gain is when you've actually made money. So I'm going to give you an example. So let's say you went to the casino with $500 and then you actually left with $700. So what that means is you've made a profit of $200. $200 is your capital gain. That is how much income you've made more than what you brought in. So that is what you're going to be taxed on. There are two types of capital gains. There are long-term capital gains, and then there are short-term capital gains. Long-term capital gains is when you held the stock for more than a year before you sold it. Short-term capital gain is taxed at ordinary income. It can range. It can be 10% or it can be 37%. It can vary. So when it's short term, it's not the best because it has so much variables depending on how much you make. Long term capital gain is much better because you're only taxed at 0, 15, or 20%. Lastly, make sure that you share this video with a family member or friend that you know that invests inside the stock market. Make sure you also download the Jumping Jack Tax mobile application to find a tax professional in your area where they can tell you exactly step by step how to prepare yourself for this tax season.
Got my taxes jumping, now my bag coming with that major money, dripping blessings that might buy a house for my